I am now going to review problem 4-1 in your textbook, and it is going to review the income statement, including not only income from operations, but also income from discontinued operations. Selected information about income statement accounts for Reed Company is presented below for the company's fiscal year ending December 31st, 2021 and 2020. And they give us the income statement accounts to prepare the multi-step income statement. On July 1st, 2021, the company adopted a plan to discontinue a division that qualifies as a component of an entity as defined by GAAP. The assets of the component were sold on September 30th, 2021 for $48,000 less than their book value. Results of operation for the component included in the above balances, the balances given to us for the income statement accounts for 2021 and 2020. Now, they actually now give us the financial accounts, the income statement accounts that are affected, and to calculate the component that is being sold. On July 1st, 2021, the company adopted the component unit to sell the component unit. And the component unit was not sold till September 30th, 2021. And the sales revenue that pertain to the component unit is listed below, and the cost of goods sold, the administrative expense, the selling expense, and operating income. They can determine the revenue for the component unit being sold. And in 2020, they provide the same information. In addition to the account balances above, several events occurred in 2021 that have not yet been reflected in the above accounts. A fire caused $50,000 of uninsured damage to the main office building. The fire was considered an unusual event, which would be a temporary event, and we want to note that in our operating expenses. Inventory had a cost of $40,000 and had become obsolete because of a competitor's introduced a better product. The inventory was written down to its scrap value of $5,000. Again, that's an unusual circumstance, and they had to write it down to $5,000, which means the write-down was $35,000. That would be included in our operating expenses. The income taxes have not yet been recorded. The requirement: prepare a multi-step income statement for the Reed Company for 2021, showing 2020 information in a comparative format, including income taxes computed at 25% and earnings per share disclosure, assuming $30,000 of outstanding common stock. In preparing the Reed Company's comparative financial statements for year 2021 and 2020 is necessary because if you remember the qualitative characteristics of financial reporting we reviewed in chapter 1, in order for the financial statements to have useful information, they have to be comparative and consistent. So we're going to start out with sales revenue. The total sales revenue was $4.4 million. Now we know from information given to us in the problem, the income statement accounts given to us includes all income, including the discontinued the component unit that we will use to calculate the discontinued operations. So at the first set of income statement accounts for Reed Company, that included both amounts, so it'd be $4.4 million, and then we would subtract the sales revenue of $400,000 to have sales revenue reported of $4 million, which excludes the component unit income for 2021. We'll go to 2022 and we will do the same calculation. The first set of income statement accounts has the total revenue of $3.5 million and the component unit up for sale not till 2021, but before comparative purposes, that revenue in 2020 was $500,000. So the sales revenue in the comparative statements for 2021 and 2020 is $3 million. The component information will be reported in the discontinued operations section of the multi-step income statement. We do the same thing for the cost of goods sold. From the information, we take the total cost of goods sold for the entire company and subtract the component unit. And therefore, for the cost of goods sold, we would take $2,860,000 minus the $290,000. And we would do the same for the information in 2020. So our gross profit in 2021 is $1,430,000, and in 2020 it is $1,320,000. We would do the same thing for the expenses. I'll go through the administrative expenses. For 2021, the administrative expenses is $800,000, and we would subtract the $50,000 that pertain to the component unit that is going to be was put up for sale in July and sold in September of 2021. Again, for comparative purposes, we would have to restate the administrative expenses to the $675,000 and subtract the $40,000. You would do the same for the selling expenses in 2021 and 2020. Now, as we spoke in class, these are permanent expected accounts, administrative expenses and selling expenses. However, we also include unusual items, and it's on a separate line because we want to point out to the readers of the financial statements that the following two line items on the income statement are unusual and temporary. The first was given to us in the information, in addition to information, and that was number one. There was a fire that caused $50,000. So that's included in 2021. 2020, it's unusual, so we're not seeing it. And again, the loss of inventory write-offs. We want to give the readers of financial statements additional information of a temporary occurrence, which is $35,000. And the reason it's $35,000 is the inventory cost the company $40,000, and it had to be written down to $5,000. So that's a write-off of $35,000, an expense. And the reason being is a competitor came out with a better product. That did not happen in 2020. So the total operating expenses is $1,175,000 for 2021, and 2020 total operating expenses is $917,000. Operating income is $255,000 in 2021 and $403,000 in 2020. Other income that is not separated as a component unit is your interest revenue of $150,000 in 2021 and $140,000 in 2020. Your interest expenses given to us at $200,000 in 2021 and $200,000 in 2020. So our total other income, this is incidental income, not the specific, does not include income or expenses that are the result of the operations. They are incidental. So we have total other income in 2021, a $50,000 deficit, and in 2020, a $60,000 deficit. Income from continuing operations before income taxes is $205,000, which is the operating income, minus the deficit in other income of $50,000. And in 2020, it would be the $403,000 operating income less the $60,000 deficit in other income for $343,000. The income tax expense rate is 25%. So you would take the $205,000 times 25%. So your income tax is $51,250. You would do the same thing in 2020, and your income tax expense there is $85,750. So our income from continuing operations is $153,750, and in 2020 it's $257,250. Now we are going to complete the discontinued operations section of the multi-step income statement, and we know there's two components. The first component is the actual operating results of the component unit, and the operating results in 2020 was given to us at $120,000, and the income tax expense would have been 25% of that, which is $30,000. So income on discontinued operations in 2020 is $90,000 for a net income of $347,250. The reason we don't have any loss or estimated loss in 2020 is because the component was not decided for sale until 2021. Now in 2021, our income from operations given to us in the problem was $40,000, and the loss on the sale of the assets were $48,000. So our overall loss is $8,000, a deficit of $8,000. 25% of that deficit is $2,000. So the net operating loss on discontinued operation is $6,000. And our net income in 2021 would be $147,250. Now, our earnings per share, we have to break it down by the income from continuing operations and discontinued operations. So, I'm showing you the formula here. We would go up to B108, which is the income from continuing operations of $153,750 divided by the shares outstanding of 300,000, and that would give you 51 cents. You would do the same calculation in 2020, except it would be C108, which is income from continuing operations, divided by the 300,000 shares outstanding. Now, the discontinued operations in 2021 would be the deficit of $6,000 on B114 divided by the 300,000 shares outstanding, which gives you 2 cents deficit, which our overall earnings per share is 49 cents. And the same calculation would be performed on the discontinued operations, which would be the 90,000 divided by 300,000, which is 30 cents. And the net income earnings per share is $1.16.